If you avoid these 4 trading mistakes that I'm about to share with you in this video, is going to help you to become a more profitable trader. Okay, guys, so I have 4 trading mistakes that I would like to share with you guys, which I hope you will start avoiding after watching these videos. These are mistakes that I did a lot when I first started my trading journey. Okay, I wish I knew about them in the beginning, but hey, you learn from your mistakes, right? So I learned from that mistake, and that's why I now want to make this video so that I can share with you guys, because you guys probably don't know about these things. So yeah, I hope you guys will find some value out of this video. All right, so the mistake number 1 that you want to avoid when you're just getting started with trading is to rely on indicator. Okay, you don't want to be relying on indicators, okay, because indicators are not 100% accurate. A lot of indicators, they tend to lag. Okay, they tend to lag a lot, and because of this, when you follow indicators, you might end up entering at the wrong time or getting out at the wrong time. So this is why you want to actually learn to read charts on your own. It's actually way more smarter to actually start learning how to analyze the chart on your own before you start applying indicators in your analysis. For those who don't know what an indicator is, basically an indicator here, I'll show you. Okay, so on trading view here, if you want to put an indicator on your chart, you just go here at the top where it says indicators, right? You click on that, and then you can search whatever indicator that you want to use. There are like hundreds of indicators available in the market that you can use, and a lot of them, they tend to not be very accurate. You know, they lag a lot, and which will just make you end up in bad trades if you're relying on them. However, there are 2 indicators that I have been using since I started my trading journey, and I found these indicators to be very, very helpful and accurate. I don't rely on them 100%, but I have been using them in my trading, and it has helped me a lot. Okay, so this indicator is the RSI indicator and the Naturals bow. The RSI, you can easily find it here on TradingView. If you just go here on indicator, just search RSI, and then you'll see here's the first one that says Relative Strength Index. That is the one that you want to use. You just click on it, and then it will automatically show up on your chart here. The other one is the Naturals bow, and this is an indicator that I personally bought from Crypto University. If you want to get this one, you do have to buy it. You can buy it at cryptouniversity.network. Okay, so that's mistake number 1. Do not rely 100% on indicators. Instead, start to know how to read the charts on your own. You want to learn things like candlesticks. Okay, you want to learn candlesticks, learn about chart patterns and the price action and the volume. Learn to analyze the price through the volume. Okay, guys, mistake number 2 that you want to avoid when you're just getting started in your trading journey is using high leverage. Okay, you don't want to use high leverage when you're just getting started, because it's going to wreck you. What is a leverage for those who don't know? Okay, let me go to Bybit here. I'll show you what a leverage is. Basically, leverage is what allows you to trade with more money than you have. If you go on Bybit testnet here, okay, you see here at the top right here where I am moving this mouse. Okay, if I click that, you'll see it has the leverage. The maximum here on Bybit is 100x, and then we have 1x, right? So basically, the higher leverage you use, the less money you need to trade with. However, with that, it is very easy for you to get liquidated very, very fast, because the price only needs to go against you by very little, and then your position will just be closed, and that is not good. And low leverage is better to use than high leverage, and that's because with low leverage, your chances of getting liquidated decreases, okay? The price has to change by a lot before you get liquidated. That's why you want to start out with very low leverage. I recommend like 10x or lower. That is like the safe range for a beginner. High leverage is good to use only if you're like more experienced and you understand what you're doing, you are like very certain about the position that you took, okay? That is when it is acceptable to use high leverage, okay, guys? So don't start out by using high leverage like 25x, 50x. Heck no, guys. You do that, you are going to get wrecked. I recommend 10x or lower. The next mistake you want to avoid is trading with your emotion. Guys, this one is actually the big killer. This is basically what trading is, okay? If you learn to master your emotion, okay, then you are going to become successful in trading, because trading is 90% emotion and 10% really analysis. That is basically what this game is. It is all about your emotions. And if you are trading with your emotions, you are going to be losing so much. You want to master your emotion, learn to master your emotion. When you place trades, don't place them based on your emotions. Like say you're in need of money, and then you're going to just go ahead and enter a trade just because you're hoping that you're going to make a lot of money from it, but you didn't even analyze the market. You just enter very random trades. You know, that's trading with your emotions. Or let's say you're in a trade and then the price is going against you. You see that you are in a huge loss, but instead of properly analyzing the market to see what's going to happen, you decide to close your trade just because you are afraid that you're going to lose more money. So you just decide to close that trade. You know, that's trading with your emotions, and you don't want to do that. If you trade with your emotions, you are going to get wrecked. You'll just keep losing every time. So master your emotions, okay? One of the ways that I have found helpful is by not looking at the chart all the time, okay? When I am in a trade, I try to not open my chart every single moment to see what's happening in the price. I'll just leave it alone for a few hours, and then I'll come back later to see how my trade is going, right? This, I find, it has helped me to like not be emotionally led to what's happening in the market, right? So this is something that you can do when you are entering a trade. You can set up everything automatically. You know, this is what I love about trading. You can actually set up where you want to close your position. You can set your stop loss and everything, and that way everything's going to happen automatically. If the price does go your way, then the exchange will automatically close your position for you. But if the price goes against you, then the exchange will close your position and you will take your losses. And on to the last trading mistake that you want to completely avoid, okay? This is trading against the trend. Never ever do you want to trade against the trend. So what do I mean by trading against the trend? I'll show you. So on TradingView here, let's see if we can find a trend, okay? Let's say, for example, like right now, we're looking at Bitcoin here on the daily time frame, and we can see the main trend here is obviously downward, right? We have been in a downtrend here for the past couple months. So this is a downtrend. Since we are in a downtrend, the best trade would be to short Bitcoin, right? In a downtrend, you want to be looking for shorting opportunities, not longing opportunities, right? So trading against the trend here in a downtrend would basically mean that you are longing Bitcoin. You're basically going long when the market is in a downtrend. That wouldn't make sense. You're basically trading against the trend. You want to look for short positions, not for long positions. So that's an example of trading against the trend. And that is something you do not want to do, because hey, the trend is your friend. You want to be trading with the trend, not against it. Anyways, guys, this is it, okay? The 4 mistakes you need to avoid when you are trading cryptocurrency is: number 1, do not rely on indicators. Instead, learn to read the chart on your own. Number two, do not use high leverage like 100x, 25x. Those are leverage you want to completely avoid. Instead, use low leverage like 10x or lower. And number three, do not trade with emotions. You're going to get wrecked. You're going to completely get wrecked from that. Instead, learn to master your emotions. And lastly, do not trade against the trend. Okay, guys, I hope you will start applying this into your trading, okay? And I hope from this, you're going to start noticing that you're a more profitable trader. Hit that like button if you found some value out of these videos. I truly appreciate it. I'll see you guys in my next video. Have a great day.